The value of gold typically increases during times of economic uncertainty or volatility as a safe haven asset. A gold stock investment can offer several benefits to investors. It has consistently maintained over time, which makes it an attractive investment option for the long term. Gold stocks may also provide diversification benefits, since their performance is uncorrelated with the performance of other assets. Moreover, there are several other reasons why some investors may consider gold stocks to be a good choice for maximizing returns. One reason is that gold stocks can provide exposure to the price of gold, which has historically been less volatile than other assets. Gold stocks also tend to outperform when the economy is weak, making them an attractive option for investors looking to diversify their portfolio, and can provide protection against inflation and currency fluctuations. Investing in gold mining companies can also result in increased profit margins, and potentially higher dividends as gold prices rise. Another reason is that gold stocks can provide leverage to the price of gold, meaning that the returns on the stocks can be higher than the returns on the underlying asset itself. Newmont Corporation is the first stock we will be discussing in this video, which trades on the NYSE under the ticker symbol NEM. Newmont is not only one of the largest gold miners in the world, but is also a leader in copper, silver, zinc, and lead. As a global mining company, Newmont operates across 4 continents, including North America, South America, Australia, and Africa. This geodiversity gives NEM access to prime mining locations and lucrative opportunities. Looking into its latest financial reveals that Newmont reported an adjusted net income of 27 cents per share, and adjusted EBITDA of $850 million in third quarter of 2022. NEM produced 1.49 million ounces of gold, and 299,000 gold equivalent ounces from other products. That puts the gold miner on track to meet its full-year guidance of 6.0 million ounces of gold production, and 1.3 million gold equivalent ounce production from other products. Newmont's project pipeline aims to increase production and improve margins and mine life. The Tanami Expansion 2 in Australia is expected to increase gold production by 150,000 to 200,000 ounces per year for the first 5 years, with commercial production starting in early 2025. The Ahafo North project in Africa will expand the company's existing operations in Ghana, adding 275,000 to 325,000 ounces per year for the first 5 years, with commercial production starting in mid-2025. Newmont's strong financial performance, robust project pipeline and focus on increasing production, and improving margins and mine life positions the company to generate maximum returns for shareholders. The next company on our list is Royal Gold Incorporated, a precious metals streaming and royalty company, listed on the Nasdaq Global Select Market under the ticker RGLD. Royal Gold primarily focuses on obtaining and overseeing streams of precious metals, royalties, and other production-related assets. As of December 31, 2022, the company held ownership in 186 properties across 5 continents, with 40 mines currently in operation and 20 more in the development stage. Royal Gold sold more than 63,000 gold equivalent ounces through its subsidiary, RGLD Gold AG. This consisted of 46,000 ounces of gold, 706,000 ounces of silver, and 2,000 tons of copper in the quarter ended December 31, 2022. Its inventory at the end of that period totaled 21,000 ounces of gold, more than 461,000 ounces of silver, and 400 tons of copper. In the third quarter, the company generated $131.4 million in revenue, consist of $98.7 million of revenue from streaming, and $32.7 million from royalties. During that quarter, the company also borrowed $500 million from its credit facility, to acquire the Cortez Complex royalty, and repaid $50 million of the credit facility on September 6. Royal Gold, through its subsidiary RG Royalties, has acquired 2 portions of a gross smelter return royalty for the Cortez complex in Nevada, for $204.1 million in cash. The Cortez complex is a significant property for the company, and has generated over $400 million in royalty revenue since 1995. This additional acquisition is expected to make the Cortez complex one of the top 3 revenue-generating properties in the company's portfolio in 2023. This makes Royal Gold an even better investment choice for maximum returns. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving, or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. The next gold stock on our list is AngloGold Ashanti Limited, that trades on NYSE under the ticker AU. AngloGold Ashanti is a gold mining company based in South Africa. The company has a diverse portfolio of mines and operations in several countries, which can provide a buffer against risk in any one particular location. Furthermore, the company has a strong track record of responsible mining practices, which may be important to some investors. AngloGold recently announced that it has fulfilled all required conditions for the acquisition of Core Sterling, a company with properties adjacent to its own in southern Nevada's Beatty district. Core Mining was paid $150 million as final consideration for the transaction. It will now be possible for AngloGold Ashanti to realize the full potential of the Beatty district as a new gold production center. AngloGold has reported impressive year-over-year financial growth in its third quarter of 2022. The adjusted EBITDA rose by 5%, reaching $472 million for the reported quarter, compared to $448 million in the same quarter of 2021. AU generated a substantial free cash flow of $169 million during the quarter, a significant improvement from the $17 million recorded in the same quarter of the previous year. Production soared by 20%, with more than 738,000 ounces produced, compared to 613,000 ounces in the same period of the previous year. This increase was driven by higher grades across the majority of its assets. AngloGold boasts outstanding financial performance, operational efficiency, and strategic acumen, making it a highly attractive investment opportunity. At number 4 in our video is Nasdaq-listed SSR Mining Incorporated, which trades under ticker symbol SSRM. SSR Mining acquires, explores, develops, and operates precious metal resource properties in Turkey and the Americas. The company explores for gold, silver, copper, lead, and zinc deposits among other minerals. SSR Mining may be a better investment than other mining companies due to several factors, including strong financials, diversified operations, a proven track record, low-cost operations, long-life mines and strong growth prospects. SSR Mining has released the results of its recent exploration at the CB property in Canada, which showed an average annual production of 96,000 ounces of gold, over a 6-year period. These results are based on 580,000 ounces of proven and probable mineral reserves, calculated using a cutoff grade of 2.5 grams per ton of gold, and a 1.8 meter minimum mining width. SSR Mining reported strong financial results for the 9 months ending September 30, 2022, with revenue of $842 million, and operating income of $151 million. Net income came in at $100 million, or 48 cents per share. Additionally, the company produced more than 368,000 ounces of gold, and 6 million ounces of silver during this period. The company has a proven track record of producing and selling high-quality precious and base metals. The low-cost operations increases profitability and return on investment. A good mix of long-life mines providing stable revenue stream and strong growth prospects makes SSR Mining a suitable stock to keep an eye on for maximum returns. As our final candidate on the list today, we will now discuss Franco-Nevada Corporation, which traded on NYSE under the ticker FNV. As a leading provider of gold royalties and streaming, Franco-Nevada has the largest and most diversified portfolio of assets generating cash. Its unique business model provides investors with the potential to profit from gold price appreciation and exploration success, with a minimal risk of inflationary costs. Franco-Nevada increased its quarterly dividend, and announced that a dividend of 34 cents per share will be paid on March 30, 2023 to shareholders on record, as of March 16, 2023. This increase, which is 6.25% more than the previous quarterly dividend of 32 cents per share, will be in effect for the entire 2023 fiscal year. The company has been informed that negotiations are underway between its partner First Quantum Minerals and the Panamanian government regarding the future of the Cobre Panama mine. As of now, operations at the mine continue as normal without interruption, as the timing and impact of this plan are unclear. For the third quarter of 2022, Franco-Nevada realized $304.2 million in revenue, with precious metal revenue comprising 67.9% of the total. The company maintained a debt-free position, and had $2.0 billion in available capital as of September 30, 2022. Additionally, Franco-Nevada generated a robust $232.3 million in operating cash flow during the quarter. By leveraging its strong balance sheet and financial position, Franco-Nevada is able to optimize value for shareholders, while providing the security of a predictable income stream. Hopefully, this video will be helpful in assessing and adjusting your investment portfolio over time. Feel free to leave your thoughts in the comments section. You can find more stock tips at our website, stockstelegraph.com.